Good morning and welcome back to Almus Market Mornings. As the August 1st tariff deadline comes in closer and countries seem to be striking deals with the US, we got an important hint on the range of tariff rates that may be charged for the rest. President Trump, in a speech yesterday, mentioned countries could be facing tariffs ranging from 15% to 50%, and that's an important hint, especially for us in India as we await our own trade deal. Moving on to the markets, equities are doing quite well. On the currency front, dollar continues to post losses. Euro USD is nearing cycle highs, while gold saw a little bit of profit taking. Good morning, JK. What do you think about the hint on the tariff rates dropped yesterday? What are you making out of it?
Good morning, Swaraj. So, as we are nearing that August 1st deadline, we are seeing I would say, relief news on the tariffs because some big deals are being signed with big countries. And we talked about the Japanese-US deal yesterday, where 15% tariff was agreed upon. And Japan agreed to invest up to $500 billion in US. Now, US and Europe are also reportedly heading towards almost a similar deal, and that's quite a compromise if it happens, because Europe had been pushing for only 10% tariff, and if they agree on 15% tariff and with some give and take, so that will be a big deal, and for the market also it's going to be a big relief. So some people say that it could be signed as soon as today. Euro's rally and the Japanese yen rally have been driven by these deals and the possibility of more deals also. Now, what this is doing is also that Japanese deal has been serving as a benchmark for other deals like Europe. And then if Europe is also signed, people are saying that Canada and Mexican deals also might be on the cards eventually. And there's also an indication that South Korea have discussed creating a fund to invest in American projects. So this could be again, a way to get the rate of tariff on South Korea, which is now pegged at I think 30%, and they want to get it down as well. So I would say that we are actually getting close to a calmer situation on the trade war, and most importantly. The Treasury Secretary has indicated that there will soon be a talk that will be initiated with China, and maybe the Chinese US talks will or rather the deadline for China trade deal could be extended up to August 12. And he also mentioned that the talks are currently in a very good place. So once again, I feel perhaps Trump is winning his trade war. Yes, there will be some impact on the economy, inflation, because of 15% tariff. But at least it could be addressing a part of the deficit that US is running also, and possibly more investments into US. So I would say that the stock markets, the major indices actually hitting new closing highs for most of the indices, including Japan, is a reflection of the positivity of the deals, and the calmer path moving forward. That is how I see it. Currencies are only having, trying to extend their gains against the USD, which they have been posting for quite some time. So possible that even the currencies could retrace some of these gains, because eventually I think US is going to do better with these. Of course, monetary policy doubts still remain, whether how long the tightness in the rates will continue, although pressure on Powell continues for quickly easing the rates. Now, Japanese yen has gained nearly 3% from its weakest level of the last few weeks based on the deal. Although there is a bit of political uncertainty again, because Mr. Ishiba, the current PM, might actually quit because owning responsibility for poor showing in the elections. So market will assess the possible policies from the incoming incumbent if this does happen. Euro has run closer to its a recent high of 1.1850. Again, a relief rally based on the trade deal, on the anvil. Overall, dollar seems to be taking a hit again, moving towards this support near 96. I still feel that after testing the lows again, dollar is likely to see a good bounce, depending upon, of course, next week's FOMC meeting, where we will have a fresh reset or a fresh review of the overall view on the Fed side. And before that, we'll also have the core PC inflation number that can, also have some influence on how the Fed views the inflation impact of the tariffs. So now all this is what it's, irrespective of what deals are being signed between, Japan and possibly with Europe going forward. Rupee has remained stable near its multi-month week level, as the dollar, although dollar gets hit elsewhere. And of course, some selling pressure emerges at 86.40, holding the rate stable. Possibly some intervention from the central bank as well. Deal with US and possible sanctions on Russian oil remain the headwinds for the rupee. Agriculture seems to be a large part of impediment to the trade deal between India and US, as India holds firm against opening up the sector to imports so as to protect the Indian farmers, while US remains keen that that sector should be opened up, because that would set the precedent for future deals it strikes with Europe and Japan as well. These are the possible issues that, if they resolve, then possibly, India could also see some good deal being signed. And of course, now with EU and Japan deal concluding, perhaps US will relent to some extent on the Indian tariff, or India being forced to open their agriculture sector. I think market has prepared itself for the bad news, and perhaps if there is a good news, there can be some relief rally in the rupee as well. Indian stock markets are also trading very cautiously upwards. I think the earnings reports, which have been quite, downbeat so far, is weighing on the stocks, because the valuation concerns have been there quite some time. I think, as far as India is concerned, it's a wait and watch for things to evolve. Of course, we also have the background of the sanctions on Russian oil import. This week, today, we start with some strong, set of numbers, or rather important set of numbers, like the jobless claims and also the PMIs from various regions. And of course, next week, we have a data heavy calendar, like GDP and PCE from US, and then the FOMC meets. Fed members going to blackout period because of the meeting coming up next week. I think currencies will now see a much more movement now that these deals are on the concluding side. Thank you.
Thank you, JK. And I think the key theme, of course, is that as trade deals get signed, markets are having some sort of a relief. Japan-US deal, which we covered yesterday, and the Japanese deal is serving as a benchmark for others also. And if reportedly US and EU could sign a deal today as well, and if it happens, then we could quickly follow deals with Canada and Mexico. So as JK mentioned, we are getting closer to a very calm situation in terms of the trade war, and we are towards entering towards the fag end of the negotiations. Even the Treasury Secretary has indicated talks between US and China are going well. So we'll see how all of this pans out. Domestically, of course, there is some concerns about the possible sanctions on the Russian oil, the second order tariffs, and of course, the trade deal between India and US, especially how agriculture will be treated. It remains as key issues and keeping a rupee slightly nervous. And as JK mentioned, if the deal is good, then we can see some good relief rally. So jobless claims and PMI key data that are up today. That's it from us today. Thank you for listening. We'll catch up tomorrow with a fresh round of updates.